Alright traders, welcome back into my screen. Very shortly we'll be breaking down NZD USD for the upcoming week and see how we can align ourselves and put money in our pocket. If you didn't get my name is Bestman Depre Kelsey Amakri. I'm a Forex trader. I'm also a fund manager, and today we'll be talking about NZD/USD, which is about to fall off a cliff, almost 300 pips to the downside. I'm so excited. I can't even wait to share this with you guys. All right, so let's start breaking this pair down. I don't want this video to be that lengthy. Okay, NZD/USD, it's bearish. It is bearish because it checks all the characteristics of a downtrend. So this is a high, this is a low, this is a lower high, this is a lower low. But for several years, price has failed to creating a new lower low. So this was the last lower low that was created before we started pushing to the upside, almost coming to violate the bearish trend. But once we came back here again, we failed to creating a new lower low. We started pushing all the way to the upside. We came back here again, we failed. We pushed up, came back here again, also failed to creating a new lower. So this area has held, it has stood. Price has found it very difficult to actually breach this area to create a new lower low. Does that mean the trend has been changed from being bearish to now being bullish? No, it is still bearish. So we started pushing all the way to the upside. We came into this resistance bar, which is also in confluence with this trend line. You can actually see this resistance bar has held. It has held. It has started reversing price to the downside. If I zoom in properly, you also had price also rejected at this trend line. So we have confluence here. We have normal resistance, we have trend line resistance, we have candlestick bounce coming up from this area, giving us an optimal reason that this immediate trend that wants to form will reverse to continue with the major trend, which is bearish. If you look at this properly, this is a low, this is a high, this is a higher low. This low is higher than this one, but we pretty much run into this resistance area, and this trend line resistance we rejected, and we're currently pointing to the downside. And if I draw my Fibonacci correctly from swing low to swing high, you also see that we also came into the 61.8 Fibonacci level, which is a reversal level. For those of us who don't know Fibonacci are retracement tools, and the 61.8 Fibonacci level and the 50% Fibonacci level are the most potent reversal level. They can reverse a pullback to continue with a major trend. They can equally also reverse an immediate trend to reverse to continue with a major trend. So we have optimal reason as to why we should be looking for selling position to the downside. First of all, the major time frame is bearish. We pretty much run into normal resistance, which also in confluence with trend line resistance. We've also run into the 61.8 Fibonacci level. We've bounced off from all three levels, and we are currently pointing down. If you are a trader, regardless of what kind of trader you are, whether you are an intraday trader, scalper, a swing trader, and you're looking for buying position to the upside, they should lie you down and flog you. NZD/USD is coming to the downside. Cool. Now let's go to the weekly time frame. On the weekly, you can actually see, the interpretation of what is happening right here. You can also see that we form a double top at that resistance level. This is the first top, this is the second top. Not only have we bounced from that, you have also formed a reversal sharp pattern known as double top. The first top, this is the second top, and we pretty much violated the intraday we pretty much violated the immediate trend that wanted to occur within the major trend. So a lot of you don't know that even within bigger trends we have an immediate trend, okay, sometimes known as pullback, or sometimes they start pulling back to a major area. So this is how immediate trends or pullback reverse to continue with a major trend. They will always run into key areas of the major trend, and best believe once you see short patterns like double top head and shoulder pattern, or inverse head and shoulder pattern, or double bottom, best believe that immediate trend or pullback will reverse to continue with the major time frame. All right, so we've broken below, so this is it. We've pretty much taken out this immediate trend line. We've broken above. This is the immediate trend. This is a low, this is a high, this is a higher low, a new higher has formed, but we started reversing all the way to the downside. Pretty much came and violated the mid trend line, broken below it. Not only have we broken below it, we also come in for a retest of the trend line. I'll put that back again. So this is a breakout of a trend line, breakout, a retest of a trend line, a continuation to the downside should occur. And if I look left and account for these levels right here, pardon me, let me account for this level, you would pretty much notice that this is looking like a break of structure, a retest, which also in confluence with the with the immediate trend. So we have breakouts, a retest, a quotation to the downside should occur. Now, not to get you guys confused, because of how massive the monthly time frame is, there are some immediate levels we don't see on the monthly time frame. This immediate level, they are not major areas or key levels, but they can actually cause an upset to your trades, or they can also reverse a trend if you're not if you're not being careful, right? So this immediate time frame is not a major level, but if you look at it properly, you will notice we've had interactions with this level before in the past. Notice how we broke below here, we came here, we started pushing all the way to the upside. On our way coming down, we kissed this level, okay, came down here. On our, we broke above it, we retested it, pushed above. On our way coming down, we had struggle breaching this area. So best believe this area is here. There's not a major level, but this guy is here, and we've broken below this immediate trend within the major trend. We've pretty much come underneath it to do a retest of it, and also this trend line. If I bring up my Fibonacci, you will notice we have confluence as to why we should be looking for selling position to it down. This aligns with the 50% Fibonacci level. So with the monthly, the weekly are telling us the same thing. Start looking for selling position to the downside. Cool. Now let me take out all of these so I don't get you guys confused. On the daily, pardon me, I have so many lines on my screen. Cool. On the daily, you can see we form on that level, we form what they call a triple bottom. Okay, this is the first bottom, second bottom, third bottom. Triple bottom are bearish reversal sharp, and they can reverse a pullback to continue with a major trend. So the monthly, the weekly, the daily is telling us sell. All right. So if you're zooming properly, you will see the triple bottom. This is the first bottom, triple top. Sorry to say, this is the first top, second top, third top. If you're not being careful, this is also looking like a head and shoulder pattern. Left shoulder, head, right shoulder. So regardless of what this is, whether it's a triple top or head and shoulder pattern, this just tells you a reversal to the downside. Head and shoulder pattern or triple top have bearish reversal sharp pattern. They can reverse a pullback to continue with a major trend. So the monthly, the weekly, the daily is saying the same thing. Now we can't see, I'm pretty much broken below the neckline of the triple top or the head and shoulder pattern. Now we don't sell on the daily time frame. These candles are too massive and our stop loss area is going to be very wide. So on the 4 hours is where I go and refine my entry. So I'll zoom in properly. This is the left shoulder, this is the head, this is the right shoulder. This area I marked here, pardon me, this area I marked here is the neckline or shoulder line of the head and shoulder pattern. We've pretty much broken below it. Now we don't, like I said earlier, we don't sell at the breakout. Never sell at the breakout, please. Never sell at the breakout, because you can sell here, price can start pulling back up to come and violate your stop loss. If possible, even start pushing all the way to the upside. Sharp patterns, regardless of the time frame they occur, they can be invalidated. Yes, the higher the time frame, the higher the probability of a sharp pattern playing out, but regardless of the time frame they occur, they can be invalidated. Nothing in the forex market is an exact science. Your mindset should always be open for things to occur or happen. Okay, so don't sell at the neckline. So wait for the breakout, which has already happened. Wait for price to pull back. Now this is my rules of engagement. Wait for price to pull back into the neckline right here. If we pull back into the neckline, wait for a bounce off of this area, either a 4 hours bearish candlestick bounce or a daily candle bounce from here. I will draw my counter trend line Please, again, don't sell at support or resistance, so you're not prone to market manipulations or fake outs. Okay, wait for price to pull back, wait for the pullback into this level, or maybe we price might actually fake out a little bit to induce some dumb traders, then actually breaking down below. So if we fake out, then we start breaking down below, it's still the same thing. Okay, so either we just wait for a breakout, wait for price to bounce off from this area. Once you bounce off from this area, draw your counter trend line. Never sell out support or resistance. This is a resistance level. Never sell here. Once price comes here with bounce, draw your counter trend line. At the break of your counter trend line, you can start selling all the way into this level. Once we come in here, I will lock in significant amount of my profit, then push my stop loss past break even in anticipation we'll get to my overall target, which is somewhere around this level right here. So this is a 300 pips to the downside. So we have all this space to work with, guys. We have all this space to work with. So the rules will be I think that again, wait for a breakout, a pullback into here, wait for a bounce, a break of a counter trend, and you can start selling. Or if price breaks above here and we break back below here, it will mean we probably just came to induce some traders whose stop losses are here. We already sold at the break and the stop losses are here, just market manipulation. That will give you more confidence to actually jump in for a sell. If I see market manipulation occur around this area, I'll be more confident in clicking the sell button to the downside. But once you start selling, once price comes in here, I will lock in my first position entirely as profit. Then I'll push my stop loss past break even or my second position in anticipation my second position will get to my overall target. So why am I locking in my position right here? This area is the 100% retracement level. We can come in here and form a base and start pushing back to the upside. As traders, the worst thing you want to do is to be in a lot of profits. You've done your analysis, your entries are spot on, you place your trade, you'll be in a lot of pips, only for price to come into an area of concern. Because you can't see it, your profits get wiped out, and now price is coming to violate your stop loss. Price just comes into a level because you can't see it and start reversing and almost coming to violate your stop loss. Or worst scenario, price comes and violates your stop loss. The average trader will become very hungry, and best believe your emotion will kick in. One losing trade can now open a portal of series of losing trade. You don't want that to happen to you. So once price comes in here, please lock in a significant amount of a profit. If I go to the monthly time frame, you will notice that we had interactions with this area in the past before. We've had struggles with this area before. So best believe if we are coming down, this guy will likely put up a fight. Best believe this guy will likely put up a fight. It's possible we can break here and keep coming down. It's possible, but it's also possible we can come here and start reversing all the way to the upside. You don't want to give out your profit back to the market. Okay, cool. So the rules of engagement will be, once again, wait for the breakout, the retest. Once we bounce here, we are coming down. So I'm favoring this market to the downside to the tune of 70%. So far as nothing too serious happens, fundamentally, I see no reason as to why NZD/USD shouldn't roll over to the downside. Now on the flip side, if we broke above here and we come back here and start seeing some bullish candlestick formation around here, just best believe that the wholesale setup has been violated. That again, if we break above this area and we come back here and start seeing some bullish bounce around this area, the wholesale setup has been violated. Yeah. So I'm favoring this market to the downside to the tune of 70%, and first market to the upside to the tune of 30%. So this is my conviction for NZD/USD. Once again, my name is Bestman Makri. Please do hit the subscribe button, the bell notification. I will catch you guys in my subsequent video. Peace and love.